Taking a look at the currency market now with Shireen Darmalingham, Macroeconomic Strategist at Standard Bank. Thanks so much, Shireen, for joining us this morning. So we had South Africa's rand gain 2% against the dollar yesterday, recovering from a 1.5-week low as risky assets got some reprieve. Still a lot of nervousness out there, though, and one's got to ask the question, just how long a reprieve we're possibly looking at here already. Weakness filtering through to the local unit this morning.
Yes, Alishia, yesterday we saw the rand weakness ease somewhat on the back of the fact that market participants were waiting for further clarity on that Eurozone debt. And it seems as if the controversial Greek referendum will possibly go ahead probably on the 5th of December to decide whether the austerity measures will be accepted. And it's really a prerequisite for whether the further tranche of financial assistance will go ahead and whether or not as well Greece will remain within the Eurozone. So it seems as if the risk aversion seems to be quite on, and it really calls for, really supports our call for buying into dollar dips and into rand strength. We do expect a range more or less of about 7.95 to about 8.10 for today.
Well, amidst the uncertainty, give us a sense of the trading volumes we're actually looking at, because one would assume that the market is looking pretty thin right now as it waits for European officials and authorities to come up with convincing plans to actually control this debt crisis.
Yes, as sentiment really seesaws between a risk-on and a risk-off environment, market participants really have been very reluctant to make really big decisions. So we do expect a fairly thin trading volumes to really continue as we wait for further indications from the G20 meeting later today of what's really going to happen. But at this point, it seems as if there's still a fair amount of uncertainty of how the situation will really pan out.
G20 meeting aside, we've got the ECB also out with its rate decision. No moves being anticipated on that rates front, but given the Fed's announcement that it's prepared to do more if the economy and worsening conditions warrants it moving forward came through yesterday, what are your expectations in terms of broader commentary out of the ECB today?
Our expectations is going really against what market expectations are saying. Indeed, they are calling for no rate change. Standard Bank is expecting a 25 basis points cut in interest rates today. And on the back of the fact that really conditions are really ripe for that cut, we do acknowledge that the new president will be in that meeting today and that he may not actually cut rates on the back of the fact that he could possibly wait at least until December. But we do believe that conditions, because of all the uncertainty and volatility and really underscoring the fragility of global growth and in the Eurozone, that they could potentially cut rates today.
Locally, the market has its eye on the business confidence index due today, and it's expected to have a continued weaker trend in October. And one would think that that is the consensus. Are you in line with consensus on this front, or also diverging from the trend?
No, we pretty much align with consensus on this front. In September, we really saw the financial environment components, 6 of them actually showing a decline. And we expect that to really follow through on the back of the fact that international financial markets have also been trending in the same direction. So a fairly downward trend that we're expecting for October as well.